Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
Quick question for you. Over the last year, we've seen the rise and planned fall of Cathie Woods. We all know that women are better retail investors. What advice would you give to women that want to break into the industry but may get disheartened by the challenges and prejudice that they may see you go through, or what Cathie's gone through over the last year?
That's a tough one. I mean, I started my own firm. I wasn't like a 25-year-old that was like, I just want to do it, my own way. I actually was facing, all the racism, all the sexism. And I had to create a firm and go it on my own because there wasn't a place for me. I think the most important thing that I would say is like, we got you. We're creating a place for you. Well over 50% of everybody that works at our firms are women or gender non-conforming. Well over 50% are Black. Both of our Black, Indigenous, or people of color, and both of our portfolio management teams are Black-led. I mean, there are places that are being created for you. We're paving the way now. Find ways to come work with us. So there's us, and if we're not hiring for what you're looking for, we can help you find a place.
Amazing. Thank you.
But there wasn't. 20 years ago, there wasn't.
Yeah, there wasn't.
No.
So you have $100 million of assets under management, and you're trying to scale to $1 billion. So how did you get the $100 million? All right. So you go through the process of setting up the ETF.
Yep.
And now you actually have to get people to invest in the ETF.
Yeah.
So how do you go about marketing and getting money to come into the ETF?
Well, one of the most important things that we can do is make our product available to financial advisors, because they are the gatekeepers for large amounts of assets. And when a financial advisor gets it, understands what we're doing, and that the financials work out, that unlocks lots and lots of assets. So that's one route. However, lots of financial advisors just go automatically for like the lowest cost fund, because we're basically index based. There's an index that we created that we track. We aren't trying to shoot the moon. It's index based. Thank you. But when people look at the expense ratio, they're like 89 basis points. Like, that's high. And I say to them, well, the reason you're getting so much greenwashing and impact washing is because you're telling people that they have to do all of this additional research with no additional assets that you're giving them. So we pay our folks a living wage, and we do the additional work, and the proof is in the pudding. I mean, ultimately, it really helped getting featured by the New York Times in 2020. And we have a pretty big platform. We make sure we leverage the media to work on some of our issues. So like we put up a list of all the, on our website at Adesina.com, you can get a full list of all the companies that are participating in the mass incarceration system. And we engage the media in calling up some of these asset managers and saying like, oh, you made this pledge around racial justice, but you're still holding prison bonds. We see you got rid of the stock. What about the bonds? And we had an unprecedented drop in the holdings in prison bonds at the end of last year. So, I mean, leveraging the media has been really important. And thankfully, we're saying, they're kind of giving us the mic for the first time. We're finally saying everything that the world's paying attention to. Like all these issues of racial, gender, economic, and climate justice are all coming up because, as Ian said, it's extractive capitalism is not sustainable long term. Like extracting from people on the planet is not sustainable long term. And most people are looking out for their future. So, when that starts to become apparent, then everybody kind of like wants to talk about what it is that we're up to, and the media helps out significantly.
That's big. Now you spoke about bonds. When I was on the site, I found something very interesting. The fiscal justice municipal strategy, where you're actually buying bonds. Can you talk about what that is and kind of explain a little bit to the audience?
Yeah, I'm going to do my best to talk about it without crying. Black cities pay a premium inside of the municipal bond market. That's a fancy way of saying there's evidence of racial discrimination in the muni bond market. So same bond, Black community versus a white community, the Black community is going to have to pay a higher interest rate, which makes it harder for them to raise capital for their communities across the country. So we created a strategy that it's primary purpose is flowing more capital to Black communities. We already have 60 million committed in that fund. But we're doing something else, like with 25% of the fund, we buy a special set of Black municipal bonds. And these are places where we have deep relationships with the community members, and they want something from their city council, they want something from their city treasurer, and aren't being listened to. So we have 25% of the portfolio where we go in as the bondholder, and we call up the city treasurer, we call up the mayor's office, and we say, hey, guess what? Your Black residents have something to tell you. It's kind of scary. In some of the places in the South, you can have a whole Black city and, not a majority Black city council. But once you start speaking the language of finance, people pick up the phone. Because you're like, oh, we're one of your bondholders. You're thinking about bringing another bond issue. You might want to talk to us about the issues we care about. And guess what? The issues we care about are what the community cares about. So it's really, what I heard somebody refer to it recently. Like it's a particular way of ending the racial wealth gap by actually just like directly investing in those communities. So I can't remember the term. That's what I used recently.
Majority Black communities, we're buying the municipal bonds, and with the foresight to say, look, we're going to use these bonds to improve our cities.
Yeah. And when I look at our clients' accounts and I see, so here's the downside to this one. I want to create a fund out of this one so badly because I know our folks would buy it. And it's so expensive to do. And like I said, I created JSTC to be $1 billion fund. So I have to be a little cautious with how quickly I stand up funds. But this one, when I look at the list of holdings and I see Tulsa and I see Harrisburg and Vicksburg and I see Detroit, and I really know that like we're actually flowing capital to good projects, to the right projects in Flint. Like I basically cry every time I look at our holdings. So that's the one. That's my heart project.
Can everyone put amazing in chat if you think she's absolutely amazing? I want to know, what's the number one thing we can do to help you to become like a top 10 ETF? Because last year, everyone went ARK crazy, right?
Everyone went ARK. Buy JSTC. It's really simple. It's really straightforward. We've made it super simple for you. There's a lot of information on the website about how to do that at AdesinaETF.com. And at Adesina.com, you can see who our staff are, what the issues that we're working on are. You can see, what the social justice organizations are that we're partnering with. But buying JSTC is what you want to do. If you're not sure about it yet, you can always subscribe to our newsletter. We're not spammers. We send information about social justice investing out about once a month. If you text justice to 55444, it'll sign you up for that. So if you aren't ready to buy JSTC today.
You're not going to do one follow-up?
Good.
I know you're limited on what you can say from a marketing perspective, but for those who may not be familiar with you yet or the ETF, what competitive advantage would you give them in terms of return versus what they would get elsewhere?
So one of the most important things about social justice investing is that it operates on this assumption that the social justice movements are giving us early indicators of risk. And I heard you talking about some early indicators of risk, but let me just float some numbers by you just real quick. You know me, I'm all about the private prisons. Core Civic is one of the private prisons. Their stock price was up 74% in 2012, in a year when the S&P was up 16%. This was before Black Lives Matter, any of the protests. 2014 comes along, Black Lives Matter. 2020 comes along, biggest racial justice protests ever. What do you imagine happened in 2020 to Core Civic's stock price? Well, that year they're down 62%. In a year when the S&P 500 was up 16. So when I say that social justice movements are giving us early indicators of risk, I'm talking it's 1860, the Civil War hasn't started yet. Do you really want to be invested in plantations and slave ships? Is basically the way I feel about mass incarceration. So I think that there's a huge value proposition here. And it's not just, I hammer on this issue of mass incarceration because it's so important and also very personal for me. But we look at across the board when it comes to issues of gender justice and economic justice, as well as climate justice. We're on the leading edge of making sure we're the first to incorporate those into portfolios.
We actually did an episode about this. the week after George Floyd was killed, and we talked about police brutality bonds. In depth, we talked about socially responsible investing. We had a whole segment about this, and we spoke about that. Of course, we talked about what's the name of the private prison?
Civic.
Core Civic.
One of the private prisons.
We talked about them. So yeah, this is definitely good information for sure, and it's something that people should definitely be aware of. Now, in your ETF, some of the companies that you have is MasterCard, Nvidia, Amex, Adobe. What made you pick those companies, and do you change allocations? Like, obviously ETFs have flexibility where if one company is not performing at a high level, then you can lower the percentage or kick a company out. I know your ETF is new, so have you changed allocations yet since you started?
Yeah. We've shifted allocations. So we're active on issues of social justice, and that's one of our primary risk management, in addition to deep diversification. That's one of our primary risk management tools. But we're really, we built an index on purpose. Like, we're really trying to say this is a replacement for investors with social justice values. So it actually has to be something that can be a core part of your portfolio. So what that means is, like, we are not cowboy asset managers, as they like to call them, like just looking for what's good in the short term. We're actually looking in the long term for, like, who's going to pass all 40 of our screens, all 61 of our metrics for social justice. That's a hard thing to do. And we're letting the data drive the portfolio. And when companies don't meet those thresholds, we kick them out. And we have already on several occasions.
So you got 737 holdings. Is what I'm looking at. Is that correct?
Yep.
And so I'm looking at the asset allocation percentages. It looks like it's pretty equal weighted. Is that something very intentionally that you're doing? And do you plan to stay that way long term? Just keep them equal weighted?
We're talking about equal weighting each of the constituents, each company?
Yeah.
Yeah. Yes. If you're going to build $1 billion fund, and you want it to be a core portfolio, then it's actually important that it's very well diversified, which means not making crazy bets like that. We actually run so we start with 9,000, you run it through all those data sets and get it down to under 2,000. We then run an optimization algorithm, which is something that allows us to select by algorithm the best actors to really get it down to a core portfolio that is appropriately represented across countries, across sectors, across market capitalizations. So taking short-term big bets, we're kind of the opposite of Cathie Wood and ARK. Taking short-term big bets is what we're about. We're all about the long-term investor. So,
does investing this way in a recession or economic downturn give you an advantage, or do you have a lot more drawdown during these periods?
We've had a little bit of drawdown, but certainly not as much as other portfolios. It seems to be that, like, whenever there's turmoil in the world, there's always something relevant to our portfolio that's happening. People are looking for places to put their money that will both get them the long-term returns they're looking for and also address the issues in the world that they care about. I think we've all learned that where we invest actually matters. And, we don't want to be funding the things we actually want to get rid of. So I was talking to a reporter from the New York Times yesterday who was asking about, like, what the drawdown has been. It hasn't been very much. We actually usually get a boost whenever these issues come up. So, like, even with us, we had one Russian holding and we removed it from the portfolio prior to the invasion because we did some updated research and found that they violated our surveillance screen. And one of the data providers hadn't caught that. So we're just really able to stay on top of current issues in a very dynamic way and with information that really right now, nobody else in the financial industry is paying attention to.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Whole clip going up. I know they can't stand it.